Saxo's Q4 is all about emerging market. An emerging market under attack from a combination of trade war and a much tighter Fed driving the dollar higher. Where to go from here? Well, either emerging market is the most and the best value out there, or it is a value trap. We tend to think it's somewhere in between. Certainly, the US market, as we see it today, is extremely overvalued. In valuation terms, it's never been more expensive relative to emerging market and MSCI World. At the bare minimum, we recommend to sell the US equity and buy some emerging market over the course of Q4. China is right now paying the price for an extremely tight monetary policy over the course of the last 2 years. They have been trying to cut interest rate over the course of this year, but they've been too slow and the hole is too deep to dig them out right away. What happens and what transpires over the next 3 to 4 months will really decide not only the fate of the emerging market, but also the globalization trade, where we think the midterm election in the US is clearly an indication that we have moved into a Cold War, this time not in military, but in technology, where the American First agenda is meeting face to face with the Chinese 2025. Both of these plans are trying to create an independence of each other. In other words, globalization is about to go totally cold, and what we can see over the next couple of months is a further escalation in the rhetoric, because these two parties are not willing and able to find a compromise. Everything being equal, I am the most optimistic I've been in my 30 years of doing this job, but for one reason only. It can only get better from here.